Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's been a strong day for the market, Santo. We have been able to hold on to the opening gains and it looks like we are on the brink of crossing that 18,000 mark. If you look at the Nifty and Sensex, they're all set to end higher today and are now touching distance away from the 18,000 mark, especially for the Nifty. If you look at the breadth of the gains, if you want to get an idea of that, just look at the sectoral indices on NSE. All the major sectoral indices are in the green territory. The small and mid-cap space are clearly outperforming as they have been doing for the past few weeks now. And globally also the setup looks quite good, Santo. If you look at the Asian market and the European market, both have given very strong returns today on the back of what seems like a return of risk appetite globally among investors.
Well, CJ, now the consensus clearly is that in all probability we would be seeing a new high by Diwali.
Well, but you are scared of consensus, aren't you?
Yes, that's I always take it as a contrarian indicator.
Yeah.
Now, other than Bernstein, which has said that probably the market could retrace, it's unlikely to go up in a hurry, and when it slips, it could go past the previous low. Other than Bernstein, I would say that almost every other leading investment bankers.
Even if you look at US market, Santo, people like Jeffrey Gundlach and all have come out and said that they expect almost a 15 to 20% drawdown in the S&P 500, at least by the end of this year. So yes, there are that bear crowd is also now gaining momentum.
Yeah, they come out of the woodwork suddenly when the market falls.
Yeah,
that's the only time. But Bernstein here seems to be the lone voice at this point in time, which is asking for caution. And CJ, let's not forget at this point, it's more of there is no alternative factor which is actually driving all the inflows. It's not really about earnings upgrade or P re-rating. It's purely just brute money which is flowing in. You've seen heavy FI buying after a very long time. Purely a liquidity driven rally at this point in time, which makes me a little cautious at this point now.
And funny, Santo, that this was coming at a time when actually Fed is going to taper its balance sheet even at a faster pace than what it has been doing for the past 6 months, 3 months actually. So, I mean, it seems a little counterintuitive that liquidity should be so abundant in India at a time when liquidity globally is actually
domestic liquidity
scarce.
is pretty strong, CJ. Yeah. At this point, if you ask any of the local investors, they're all pretty bullish on India, and they say that this is, of course, the usual talk about equity being a long-term thing and why it makes sense to invest now. I think that's the general mentality at this point in time. At least over the last couple of years, anybody who has put money into mutual funds has only seen very strong returns. So
returns beget returns, as
exactly,
they say,
as they say. Nothing brings customers through the doors than a market at record highs.
And of course, if mutual funds come out with surveys that being lone investors in the market actually makes you underperform, then being a mutual fund investor, that just adds to the narrative that you probably should stay invested.
And look at the strong performance of the passive funds. That's another factor. And the more passive funds perform, the more money it pulls in, which means that they again invest into the same set of stock.
That is now becoming a longer term trend. I think we will need an entirely different show to dedicate it to talk about that.
When trends come into play, it looks as if they will last forever, but it really doesn't work that way. If you look at it, I mean, you're probably looking at it from a 10-year perspective. I'm looking at it from a 20-year perspective.
No, of course, 20 years, of course, active would have done better, but I think we should leave that debate for I think that is a good debate to touch upon later in this week. But let's quickly now move on to some of the crucial stocks that were buzzing in trade. And
starting with Adani Ports and SEZ, good strong performance by the stock, and especially after the first quarter numbers, you've really seen the stock fire up. It's been struggling if you see over the last 6 months, but of late again there's renewed buying interest. Now the company has given a guidance of about 350 to 360 million tons for this fiscal, and it seems, at least going by the first quarter numbers, it comfortably seems well set to achieve those targets. And even if you look at the first quarter numbers too, it was a mix of many factors which drew a record performance. You had both realizations improving as well as volumes going up by about 8%. And according to Edelweiss, now Adani Ports is not just purely a domestic play. It's expanding its international footprint as well. It's made an acquisition in Israel, which is a fairly developed country. So obviously the cash flow visibilities would be better. There's also talk about a foray into East Africa. Besides that, there is also the chatter that Adani Port may bid for Concor. So there are multiple triggers in play, but the most important one at this point in time, which is drawing buyers to the counter, is the fact that energy imports are pretty high, especially those of coal, and that has really picked up in a big way. So, that itself means that maybe the company could even overshoot the conservative guidance that it had given at the start of the year.
Well, Santo, I am a little surprised by the strength of Adani Ports because given how, given its interlinkages to the global trade network, you would expect that how the slowdown is happening in Europe in a lot of the trade networks across the world, you would expect that Adani Ports will also suffer because of that. But clearly at this point of time, investors are looking beyond that wall of worry and they're looking, into the next 2-3 year story for Adani Ports. And I think that is probably reflecting in the stock. But I would still be a little cautious with respect to the volume guidance because at this point of time, we have not yet seen the full impact of the slowdown in trade in Europe as well as in US. And it will be interesting to see how that develops over the next 6 to 8 months and how that will affect probably, by the March quarter, we will get to have a clearer picture or whether that will affect their FY24 numbers or not, because FY23 probably market has already discounted that and digested that, but now the outlook on FY24 would become more important as far as Adani Ports is concerned. The interesting bit is that, within the Adani group, Adani Ports actually has been one of the laggards, even though the stock has risen quite considerably. If you look at, compare it to the other group companies, has actually been one that has, been a little bit more measured in its rise so far. And technically also, I'm a little concerned because the RSI, which is one of the very key momentum indicators, that is also now inching towards that 80 territory, which generally would suggest that there is a pullback in the offering. Probably, people who are sitting on the fence may utilize it as a bargain buying opportunity, but some others who have bought Adani Ports in the past 3 to 2 months, they might see it as an opportunity to book some profit on the counter going ahead. Well, talking of stocks and talking of revival stories, Infosys clearly was buzzing in trade today, and not only Infosys, in fact, it was probably the catalyst for the sort of demand that we are seeing in IT stocks across the board today, Santo. And it seems almost like investors are again warming up to the sector after the correction that we have seen in the first 6 to 7 months of this year. It seems like IT stocks are again coming back into the radar of investors. And I think that is also because the commentary that is coming in now, it's been almost 4 years, 4 to 5 months now post that war and post the recession talk and Europe slowdown talk, and still the commentary from IT companies or IT majors has not changed. Infosys, Wipro management were recently having conversations with BofA Securities and Citigroup, and they still reiterated the fact that there has not been any sort of cutback from clients. There has been no delay in projects. There have been no pushback from clients to cut down on spending, and I think that is what market is reading at. Market now believes probably that the growth story that everybody was talking about last year was not just a flash in the pan. It is something that is more sustainable and more long term. If you look at Infosys itself, Santo, they have indicated the supply side challenges that they had in terms of attrition. Remember last quarter Infosys attrition was the highest among the major IT players at about 28.5%. They believe that the peak of that stress is now behind, and going ahead that should aid margin for the company. And overall, I think given the correction now and given the derating that the PE valuations have seen, maybe this is one sector to look out for.
Well, I think CJ, at this point in time, the occasional pullbacks that you're seeing in the stocks, in IT stocks in general, not just Infosys here, could have more to do with some kind of tactical buying. If you look at the stock prices, well, they still, forget the Jan highs, what we saw. Even after the first quarter, you saw a spring in each of these stocks, and even from those levels, the stocks are still some way off. Last week itself, you had a big sell-off in these stocks, and over the last 2 or 3 sessions, again, there seems to be some change in outlook towards this stock. So I would say that there is no definitive change. Well, the market seems to be cognizant of the fact that the current fiscal is the companies are going to deliver on what they have promised for the current fiscal. That's not in dispute really. I think where they are worried about is probably what could happen from next fiscal itself, and that is what is probably holding them back from really going after the stocks in a big way. I would still be a little skeptical here.
Well, Santo, I think probably if you are somebody who is making a tactical play, then probably I think these concerns would be more paramount. But if you're somebody who is making a long-term play, maybe looking at 2025, I think then say the correction that a stock like Wipro has seen, almost 40-45% downtick from the record highs that the company had touched earlier this year. Infosys, Tech Mahindra, HCL Tech, these are stocks which are available at very, very discounted prices now compared to the outlook or the commentary that these companies are giving. And yes, profitability was, of course, among the major challenges. But clearly, even the analyst community now feels that most of those challenges are now behind. And I think it will be very interesting to see maybe if there are upgrades to price targets and maybe valuation multiples after the second quarter earnings comes in.
Well, at some level, CJ, it does make sense to look at stocks from a 2-year perspective, but sometimes there is also this question of huge sharp drawdowns in between, which tend to kind of compress
this could be just one of those, this could be one of those drawdowns probably in a 5-year story.
One never knows, CJ. We can
because
hindsight will tell us.
IT has a tendency to move in, phases, whenever, I mean, there was that growth phase from post 2008 till 2012, 13, and then from 13 to almost 18, 19, you had that slowdown period, and IT stocks were just nobody wanted to be around them except for if you wanted dividends or buyback. But again, post 2022, they have again returned to this phase, and a lot of analysts, old analysts who have been tracking the sector for almost 20-25 years, they feel that maybe this is a new leg, a new super cycle in this sector, and who knows, only time will tell whether they are right or wrong.
My own take, CJ, here is that when you're talking about a slowdown in US and the European Union, of which there are clear signs at this point in time, irrespective of what the stock markets have to say. That being the case, it looks like IT companies could face some rough weather, at least in the short term.
Well, Santo, your next stock.
Well, Coal India, again, CJ, I know this has been one of your favorites, and actually the stock has performed
Market's
well.
favorite, not only mine, even market's favorite.
But unfortunately, I have a bit of a long memory out here. I've seen the hype around the IPO and the big high, and after that it's been just one way down. Of course, for the time being, again, there's a change in outlook here. The numbers have been pretty good for Coal India, but I still remain skeptical just for one reason, CJ, ESG concerns. The moment things start looking better, right now there's a shortage of just about everything on earth, right? The moment this shortage factor reduces, probably you will have investors taking a hard look at especially those stocks which are seen to be polluting, and Coal India clearly is one of them. So it's a good strategic bet as long as you can ride the stock in time and get off at the right time, CJ.
Yeah, I think, Santo, if you're looking at 15-20 years sort of investment in Coal India is not the place for you to be at.
Forget 15-20, I'm saying even 3 or 5 years.
No, 3 or 5 years will be too much. I'm telling you, because at this point of time, the demand supply situation clearly is in favor of Coal India, especially because globally also what is happening with crude oil, what is happening with natural gas in particular, because natural gas was your big ticket to get out of your dependency on thermal power plants, right? Even in India, I mean, you had the finance minister talk about it, that how their goal of probably shifting a lot of the thermal power plants into natural gas based power plants has now taken a big knock because of the fact that natural gas prices are just through the roof across the world. I mean, at home we have had almost 100% upward revisions in administered gas prices. So clearly, I think the challenge with natural gas at this point of time is making coal again very attractive. And because a lot of coal demand is there and supply, of course, there has been hardly been any investment in global coal supplies. Therefore, the demand supply shortage. And I think if you look at the e-auction premiums, that is a very good indicator of the demand supply indicator at this point of time. Last quarter, e-auction premiums were almost 200%. For Coal India, and that is something that I think will continue to drive earnings for the company, not only into FY23 but maybe into FY24 as well. And then we will have to reassess probably by the end of, by the mid of 2023, how the situation is, whether supply is coming back or not, or whether demand is slowing down because of an overall global slowdown and maybe even a domestic slowdown, Santo. Well, the next stock on my radar today is MediPlus. The stock was in demand today after Nomura India came out with an initiation report on the stock with a very interesting outlook. They have given a buy rating on the stock. They see almost double-digit upside in at least the next 12 months going ahead, and they believe that the stock is a very good play on the the retailization of the pharmacy market in India. We know that generally retail is something that is always a mom and pop shop sort of a thing, in India. But now we are seeing organized retail chains happening. We know about wellness in Bombay. You have 24/7 in Delhi. So a lot of this market is becoming organized, and MedPlus is clearly a play on that. Nomura is expecting almost a 27% CAGR growth or annualized growth over the next coming years. And overall, they expect them to wean away market share from the unorganized players going ahead as more and more, pharmacies become more organized. So, of course, it is a competitive space, because let's not forget that you have competition from online pharmacies such as, NetMeds and 1mg. But clearly, when you talk about physical or omni-channel sort of a play, MedPlus is doing quite well in that regard.
Well, this is again a theme story, CJ, and
It is,
one
it is,
definitely which
definitely.
will do well over time. But if you look at the short term, which is where I'm focused on at this point in time, look at the price performance. Its stock is about almost 50% from its peak, and there's a reason also. If you look at the net profit numbers for at least the last 4 quarters, they're clearly showing a declining trend. So there could be some concerns around that. Also, the borrowings of the companies have also gone up sharply over the last couple of years, but obviously as you would be expanding, that is again a given. But these two factors, I think so, for the time being seem to show that investors are slightly cautious on any big bets on this company at this point in time, and I think this underperformance could continue in the near term, although I feel in terms of theme, this is not something that you can play through the conventional P route, right? This is a story either you believe or don't believe, and many of the stories, they tend to do pretty well at that. But if I were to look at it from a short term perspective, this I think is a stock which is showing a lot of skepticism more than anything.
I think, Santo, I definitely agree. Of course, the company will now have to start delivering on the earnings front to win back some of the confidence of the market as well as investors. And I think probably if you're going ahead, if you start seeing that growth potential start showing in the balance sheet as well as the profit and loss account of the statement, you will get investors to come back and trust you again. We have already seen that in the case of many of the newish tech players. Clearly their performance recently has helped investors gain more confidence in their story. And I think MedPlus, and I think this is what Nomura is also playing at, that they believe that going ahead with earnings improving in the coming quarters or coming years, investors will also come back and probably re-rate the stock again.
Well, last stock on a watch list this afternoon is KC International. The stock is up sharply today and largely driven by news that the company has bagged a 244 crore order from GIPC. But more than that, I think there is a gradual re-rating of the stock which is underway at this point in time. There have been a lot of legacy issues, especially regarding to its Brazilian operation, but that slowly now seem to be getting behind. That apart, the company's management was on the channel today, and what they're saying is basically that a lot of fixed price orders, those will run out by the end of this quarter, and the orders that they're getting now currently has a variable price built into it, cost escalation clause built into it, which means that there will be clearly they won't be at mercy to rising input costs. Besides, even otherwise, input costs have been coming off, and this is again expected to aid KC International's margins. Its tender pipeline is about 1.1 lakh crore, and overall its order book is close to about 30,000 crore plus. So there's good earnings visibility at least for the next couple of years, and that makes the stock a ripe candidate for outperformance.
Yeah, clearly, Santo, I think this is one stock in the infra space that has been doing quite well. And if you look at it in terms of order inflows, I think the order inflows, although their size doesn't compare to an L&T out there, but clearly in terms of order inflows, they are doing quite well. I mean, overall, I think over the past few weeks, they have garnered almost 1,300 crores worth of orders. So that really adds to the revenue visibility as well as the confidence. And overall also, if you talk to a lot of the fund managers or HNIs, they seem to be very, very bullish at this point of time in any of the infra names because of the overall theme around capex, around the national infrastructure plan that is there. Government capex is expected to now push up in the second half of FY23. So there are clearly a lot of macro triggers for a company like KSE, and this will be one stock to watch out for going ahead.
Well, a quick look at the market at this point, and its indices are still holding on to early gains.
Yeah.
The Nifty 50 is at 17,932. That's up close to about 90 points. The Sensex is holding above the 60,000 mark. So we're set for a firm close today, CJ.
Yeah, I mean, Santo, but the story clearly is the Nifty small cap. The Nifty small cap 100 index is higher by 1.4% today. So clearly almost a 1 percentage point outperformance to the Nifty, Santo. And if you look at some of the big gainers on the Nifty 500 today, you have Fine Organics, KEC International, of course, the one stock that you talked about, Wellspun India, Walk Hard, Radico Khaitan, Vakrangi, and Ujjival Small Finance round up the top 10 names in terms of gainers. So clearly, a lot of diverse set of names, which goes to show that there is a lot of confidence. This has just not been driven by one particular sector, which has a large weight in the index. It is a very spread out market, and at this point of time, investors clearly are lapping up small cap like as if they are hotcakes.
Well, and what do we have on the horizon, CJ?
Well, Santo, there are a lot of macro data today. The August CPI inflation data for the month will come out today, along with the July industrial production data. Two key sets of economic indicators that will be coming out later in the evening. Apart from that, tomorrow, of course, all eyes will be on that US August retail inflation data that will come after market hours tomorrow. It is the last inflation data before the Fed meets, in the second half of this month. So it will be a very crucial and could define how the market does in the coming weeks.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and do let us know about your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.